Welcome to a special episode of CTBK's Face Value. Today we're talking tax reform. This week Congress is voting on a comprehensive tax package that's going to affect almost everyone in this country. Most of the changes aren't effective until 2018, but are there things we can do now before the end of 2017 to maximize our tax situation? Yes, there are. Let's consider the following. First of all, we know that for 2018, both the individual and business tax rates are coming down. So we should employ the incentive of accelerating deductions into 2017 and deferring income in 2018 if at all possible. For those of us that itemize, we're going to see some big change. Certain deductions will be limited, others will be gone altogether. And in 2018, there's going to be a much larger standard deduction, which means that many people will no longer find it to their advantage to itemize. What can we do? Well, if you project that you're going to have a balance due on your 2017 state return, let's get that balance due paid before the end of 2017. If you've got a property tax bill in your hands right now, let's get that paid before the end of 2017 so you can ensure the federal deduction. We also like to encourage sometimes you to bunch deductions into a given year to take advantage of some AGI limitations. Medical expenses are an example. If you have an orthodontia payment that's due, or you have a January health insurance premium that needs to be paid, pay it in 2017. Bunch those deductions to increase your likelihood of a current itemized deduction. Charitable giving. In 2018, rates are going down. So those charitable deductions are going to be worth more to you in 2018. Consider accelerating some of those deductions into 2017. Maybe you want to use a donor advised fund so you have more time to give thought to who you want to ultimately give those funds to. We can help you with that. Next, if you have an investment portfolio and you know you've got losers sitting there, harvest those losses. Take advantage of the losses by selling those securities prior to year end. Also, Congress has added to the tax package some incentives for businesses. 100% bonus is now available for assets placed in service after September 27th, 2017. That means if you have a business asset that you were potentially looking to buy in the early part of 18, if you accelerate that purchase into 17, placed in service before year end, you will be entitled to deduct the entire cost of that item in 2017. And then the last idea to consider is if you have children in private school or you homeschool them, the law contains provision that says starting in 2018, you will be able to use Section 529 funds to pay for your child's private schooling. So you may want to consider funding a Section 529 plan. If you want to use a New York Section 529 plan and take advantage of a deduction currently in 2017, you need to fund that 529 contribution before the end of 17. This is just skimmed at the surface. Not all of these ideas will work for you. AMT continues to be something that constrains us in 2017. This may or may not work for you, so contact us if you have questions on whether this may help you. In January of 2018, we're going to be bringing you more CTBK Face Values. We're going to be talking about the individual provisions, the business provisions, and the question of whether or not you should continue to operate your business as a pass-through entity. But in the meantime, again, feel free to call us. Don't hesitate. I'm Mary Horbachewski. Call your contact here at CTBK, and we'll be happy to assist wherever possible. But in the meantime, we wish you and your family a very happy holiday season from all of us here at CTBK. Thank you.